Let's turn to a financial advisor for his thoughts on this strategy and more. And he is James Shagawat, a wealth management principal at the Barron Financial Group. James, welcome.
Thank
What
you.
do you think of longevity insurance? Good idea, bad idea?
It depends, really. It might be appropriate.
I was afraid you were going to
some.
say that.
That's the answer, right? Yeah. There are risks to it. You're putting down a big lump sum of money, not to collect it until you're
Would you tell your
80 or
mother to do it?
85. You know, I probably wouldn't. I'd probably advise a more diversified strategy and not take the risk of, what if something happens? This is.
What if you don't reach that 80 or 85? You collect nothing for the money you've put in.
That's right. You collect nothing.
That's the risk.
That's the risk.
So what would you tell your mother to do? What are alternatives that you can sleep at night and still have money to last you through your retirement?
I mean, that's first. We got to make sure my mother has peace of mind. So what we would do is diversify across many asset classes. So stocks are risky. Bonds are not paying a great return right now. How do you balance that to get a better return? There's alternative investments. And two that we like a lot are real estate, which are real estate investment trusts through a mutual fund. And another is natural resources, which are commodities like oil and gas and timber. What they do is they don't act the way the market does. So let's say the market's on a tear. These might not be, but if the market corrects, these might help
But they're
things
still
stay
kind of
afloat.
volatile investments. They're not exactly sleep well at night type of alternatives, right?
You're correct about that. And it's very important to keep them with bonds and stocks, never on their own. You don't want a big concentration. I mean, at our firm, maybe 25% of clients' money is in alternatives, but they do work.
So if I'm, let's say, in my mid-60s or maybe even a little older than that, and I want the kind of balance, well, here we go, a sample portfolio. You've got 25% in alternatives, 25% in international stocks and bonds, 25% in domestic stocks, and 25% in standard fixed income. So that kind of 25-25 is the mix that you would argue is a good benchmark?
That's right. That's a good mix that we would use for a client.
Now, when you say timber, when you say that, you're not telling me to go out and buy forests, are you?
No. Very small sliver of your portfolio would actually be in timber.
How do I get it? How do I buy it?
Yeah.
I don't go to a lumber yard.
That's right. Through mutual funds or exchange-traded funds. They're a pool of different commodities. So, yes, they're very volatile.
And real estate, too. You're thinking REITs, the same thing?
Not direct REITs, but mutual funds, exactly. Now, this is geographically diversified. And it's not single-family homes the way you think of real estate. This is storage facilities and assisted living, and not just concentrated in one part of the country, but across the country. So we put generally about 5% of our clients in real estate. And over the last 3 years, it's been the best performing asset class.
When you say international stocks and bonds, you've got 25% in that category. Again, I am assuming you're thinking of mutual funds or ETFs that do this. Are you talking about a broad international fund, an index kind of fund, or one that concentrates in a particular region?
A combination. We do like index, we do like actively managed. But for international, we're concerned about exchange rate risk. So mutual funds are the perfect vehicle for those. Very diversified, low cost on exchange-traded funds. We've been using more of those. And it's really been working. It's helping portfolios grow, which is the goal, just like the client there. Protect the money and have it grow and make sure it's there for life.
James, I liked how you looked at the camera when you said my mother's peace of mind is critical. You were talking right to her. James Shagawat, thank you very much. He's with the Barron Financial Group.